Good afternoon, everyone. Welcome to our latest Text Talk here, A Home Buyer's Journey. I am Josh Franzen. I will be your host and moderator today. I am joined by two of my awesome peers, Mr. Paul Falcon, who is going to be our behind-the-scenes guru, and our guest speaker today is going to be our very own Michael Lee, our mortgage loan officer here at Texans Credit Union. And before we get into our presentation today, I turn you over to the wonderful Michael. We're just going to do a couple of housekeeping things here. First and foremost is this lovely disclaimer that I get to read to everybody. Just to note that the content shared in this webinar should be considered as financial, investment, or tax advice. Before making any investment or financial decisions, please seek advice from professionals like personal financial advisors, tax advisors, or other experts who can provide guidance tailored to your specific financial situation. Any insurance products mentioned are not insured by the NCUA and are not a deposit, product, or other obligation or guaranteed by Texans Credit Union. And by registering and joining for this webinar, you consent to sharing your information with event organizers and or presenters. You also agree to receive communications from Texans Credit Union, its partners, and adhere to Texans Credit Union's social media and privacy policies insured by NCUA, Equal Housing Opportunity, NMLS number 530654. Oh, all right. See, try to do it all in one breath, but I couldn't make it there. Other than that, this webinar is being recorded, so we will be able to take your questions and answers during this webinar. If you have any questions and answers, please feel free to ask during the webinar, and please use the Q&A feature. That way we can keep track of all your questions and make sure we get to every single one of them. If in the event we do not get to your question, we will certainly be sure to reach out to you directly with an answer to your question. And without further ado, I'm going to share the screen and turn it over to Mr. Michael Lee, the mortgage loan officer here at Texans Credit Union.
Thank you, Josh. Thank you, Paul. Thanks, everyone, for coming to this presentation. Again, as Josh just said, my name is Michael Lee. I'm a loan officer here at Texans Credit Union. Today, we're just going to be touching on a very high level and very basic set of guidelines in the presentation. Hopefully this may paint a good picture for you about what to expect in the home buying process. Whether it's your first time buying a house or you're looking to make it a forever home, maybe you'll pull some things out of this presentation to sort of help you in your journey there. On the agenda today, like I said, it's going to be real high level basic stuff, but it's getting home ready. What does that mean? What should I do before we enter into an agreement to buy a home? We'll also talk about the steps to purchase your home, getting the mortgage, that's where I come in, and some things to be mindful in the mortgage process. Also, what you can expect to provide to a lender. Closing time, I always say closing time is the best time. That's really when things are closing up, you're getting your keys to your house, and all of the hard, scary things are over. And then our final tips and takeaways, just some sort of, user-friendly tips here in the buying journey. So getting home ready, and what does that look like? And so this is just sort of a map that sort of illustrates the various stages of the loan file. We are going to pause and talk a little bit more a few screens from now on some things you need to do to prepare yourself. But when you enter into a mortgage loan, you're going to have various stages that your file will go through. There's pre-qualification to pre-approval, processing to underwriting, and then ultimately closing to funding. And each stage will require something that you have to do, and we'll talk a little bit about each one of those items as we get there. A couple of things to really focus on too is when you're ready to make that decision to buy a home, and really with anything in life you do, you need to have a credit file. And this is really just sort of commentary to kind of think about, there's bad credit and no credit. Various differences between the two. If you have bad credit, usually that is arrived from either making, a late payment on a credit card, or you were 30 days delinquent on something else. If you have had your credit pulled multiple times by multiple different people, then that can, have sort of an impact on your score. And then with no credit, that's kind of also known as a thin credit file. The lender, if you've never had any sort of form of credit, obviously anybody at Texans, one of our FSRs, or anybody in the branch can help you build that. But no credit is just simply there's not enough data for you to have a credit score, and the lender doesn't have really enough information to make a decision. If you've never really borrowed anything, we don't really know your ability to repay just yet. Some do's and don'ts, when it comes to credit, and this, I probably will mention this several times, but what you absolutely don't want to do is make any major purchases on your credit, such as like financing your appliances or furniture, things like that. You definitely want to kind of wait to do anything like that, and get your advice on those things with the lender. You also don't want to close any accounts. There is a negative impact on your score when that happens sometimes, not all the time, but it's just mindful to maybe keep any cards that you have to pay down the balance, but not necessarily, close the account. And you want to keep your credit activity to a minimum. And a couple of things you want to do is you really need to have your credit checked, at least I would say once, maybe twice a year. You definitely want to know what is being reported. Maybe there's some things that don't belong on there, and you don't want to have that as a surprise to you. So it's a good idea to at least get your credit checked a couple of times a year. And you want to, like I was saying earlier, you want to use a little bit of credit. That does help your score. And essentially paying things off is also a great idea. When you get, when your balance approaches your limit, that's when sometimes the credit score can kind of bounce around on you a little bit. Another item that you've probably heard of is what is a hard pull and what is a soft pull. A hard pull is an inquiry on your credit, not necessarily a bad thing, but your score could have some movement to it. And a soft pull is not necessarily an inquiry on your score, but it does give you an idea of what your score is. Now, with a hard pull, that is when usually a lending institution like a mortgage company will do that, and we pull from all three of those credit bureaus. And so if you're not familiar with credit situations, you do have all three bureaus that will report a score to you, whereas a soft pull is just going to be one bureau. So always a good idea to have your credit checked every once in a while. And those are some of the differences between those things. So saving up, yes, what a great idea. When you're getting ready to get yourself in a good position, these may seem obvious, but some things that if you're a potential future homeowner, you may not think about. So budgeting for new expenses. These are things that are unavoidable, but some people don't think to actually budget for them. They could be things like repairing the home if something breaks, if there's a leaky faucet, or maybe the plumbing isn't going really well in that particular home. You're going to need to set aside or budget for those types of things. If you live in an apartment, you call someone, they come and fix it. So when you're a homeowner, if it breaks, you own it. So definitely want to budget for things that could come up in the future. Also, some just things to take away, like am I going to be, what are my commuting expenses? Am I going to be on the tollway more? because the house is further away from my job? Am I going to have to put more gas in my vehicle? Am I going to be coming home late, so we're not going to make dinner at home? We're going to be eating out more. Whatever the case is, you want to try to think about budgeting or setting aside for those things and not living in that moment. And an easy way to do that, as simple as it sounds, is make a spreadsheet and stick to it. Maybe it's you or your spouse. You have a spreadsheet that you've put very simple in there, like what you expect to pay, and then when you become a homeowner, things like, a water bill is going to be a little bit more expensive, your electricity bill because you're buying a bigger house rather than an apartment, various things like that. But I think it's a great idea to just have a spreadsheet because it gives you a plan. And if you don't make a plan, then you're obviously going to stick to that because there is no plan. So I think getting just a spreadsheet or some kind of tool to keep you in check on this is what we're doing every single month to make homeownership a reality. But in all simplicity is the key. You want to make it simple. I wouldn't try to overcomplicate it too much. So once those things are in your mind, what do we do next? Do we pre-qualify for a mortgage? How do we go about doing this? Well, you have to know first off what you can afford. If you're, looking at houses online and they look fantastic, I want to know what is that going to cost me? And the loan officer is the best person to reach out to for that. Some things that are considered when you're trying to afford a home is obviously the price of the house. And what that entails. It's a monthly payment that's broken out into principal and interest, and then taxes and insurance. And then in some cases, depending on where the house is, you may have to pay homeowners association dues. That's just general upkeep of the house in the subdivision itself. And then what's the down payment? What have I budgeted for? What have I saved for? What makes the most sense to me? And obviously the loan officer can help guide you in that direction. Okay, then what am I going to need for all of this? Do I just fill out the application and then the approval letter comes to me? No. What you should be expected to provide to the lender is your income and your employment history, a credit check, and then your deposit accounts or brokerage accounts, specifically checking and savings account statements. How many pay stubs should I provide? Typically, it's going to be 2 full months, the most recent, and W-2s for the last 2 years. Now, if you're a business owner or if you're 1099, your tax returns will come into play there. Typically, it's a 2-year employment history, and then the credit check, we've kind of quickly talked about that. We will do a hard inquiry to perform the credit check. And then your debt is reported on that credit report, and we measure that based on or compare it to how much income you make. And ultimately, there's an equation in there that tells us, how much you can afford to pay for the mortgage. So once you have been approved or qualified, you're ready to purchase your home. And so typically, what you need to look for in a home, there's wants versus needs, right? So a couple of things to consider when you're doing that is, where do we want to live? Is this a home that is going to be something we grow into, or is this just sort of like our first home, knowing that we're going to use this as leverage to buy another home in the future? But things that you really should focus on is where the actual property is. Drive through the neighborhood, see if that's something that you're good with. Pay attention to what school district that is in. There's cities that you live in, but you go to a different ISD district or something to that effect. So you want to just do a little bit of research on that if that's something that fits in your family. Obviously, the taxes of the home. Every county in the Metroplex is a little bit different. And then there's also your homestead exemption that comes into play. But all of those things, the property taxes themselves are a factor of the monthly payment but you will pay property taxes and homeowners insurance. But how expensive are these taxes? Where are we buying, et cetera? The size and space of the home, that's also kind of obvious, but did you want to buy this house because it fits your needs today? Or is it a house that's big enough that our family can grow into? So again, all of those things you need to consider. And then the age of the home, do we want a new home, or do we want an existing home? Or do we need one? New versus existing. If it's an existing home, maybe it's a little bit older, you may want to consider budgeting for a little bit more things to budget for expenses, things like that. So there's a lot that goes into it, but that's kind of the fun part as well. So, well, who can help me? All of this sounds really good, Michael. I've got my budget. I kind of know what I can afford. I've talked to a loan officer. Where do we go from here? So not required, but highly recommended is to engage with a real estate agent. Now, before you talk to a real estate agent, some people go there first. I think it's important to get a sense of how much you can afford prior to engaging with the real estate agent. But with an agent, they are going to represent you. They do all the negotiating for you between the buyer's agent, that's you, and the listing agent, that's the agent that is selling the house. They represent you, they protect you, and obviously they negotiate for you. Again, not required, but I would definitely recommend using one. And then you're going to need a good loan officer. You obviously can choose any lender you want. We hope you consider us, but there are different forms of who can lend you the money versus, is it a local lender? Can I just drive up there and say hi to them and meet them in person? I prefer to do everything online, and then setting proper expectations. You got to keep in mind that this is probably the biggest thing you'll ever buy in your life. And so the expectations are, should be set accordingly, meaning, how buying a house should not be something that takes, a couple of days. It takes much longer than that. But, basically you want to make sure you're partnering with the right people. And so we can obviously help you with that as well. So if you've been pre-qualified, you've got your approval letter there, and you're ready to make an offer. These are some of the things that you should anticipate being responsible for when you're making the offer. Not all of these speak to Texans necessarily, but the earnest money. So earnest money is like a deposit on the home. Most of the time, the sellers of the home are going to require, at least in this market, about 1% of the price of the home. And so if you're looking to make an offer on a $400,000 property, more than likely they're going to ask for at least 1% or $4,000 as a deposit. That earnest money is credited to you back at closing. When you do make that earnest money, when you write that check or submit the wire, you want to make sure you keep a copy of all of that so the lender can show that credit to you at closing. Home inspection, not always required, but highly, highly recommended. The two kind of go hand in hand. The earnest money secures the contract for the property, and then the very next thing that I would do is get the home inspected. The home inspection is going to, kind of unearth any potential show-stopping situations about the home. Maybe something didn't present itself when you walked through it with the agent. That's what the whole purpose of the inspection is. And so if that's done quickly, and again, your real estate agent here is quarterbacking all of that stuff as well as the lender, but the home inspection, if it's done quickly and there is an issue with the home and there's not going to be a way through it, you can recapture some of that, or you can recapture that earnest money back. Again, all of that is subject to the terms of the contract that you're writing. And again, that's where the real estate agents are extremely helpful. An appraisal fee, if you don't know what that is, that's for the lender and for you. It tells the lender how much the home is valued at, how much it would be to how much it would cost to replace the home, and then more importantly, are there any issues with this house that the lender would need to see fixed. It also tells us the most important thing, which is how much it's worth, and hopefully it's worth more than what you're buying it for. And then you can sometimes have a credit or application fee. That's really lender dependent on if they're going to collect that up front or not, but they are products of the loan, so just be expecting to pay for something like that. So getting the mortgage. Again, this is just sort of a high-level view of all of the things that we do here at Texans Mortgages. There was one of them. We provide solutions for all of your mortgage needs. Our website's a great resource to see what we have available, whether you're buying or refinancing, which is a good time to do that right now. We offer programs to help our members finance their home. We have a complete suite of mortgage programs. Like I said, the website speaks to that. I could spend the next 30 minutes just talking about all the different programs. Competitive rates and closing costs, absolutely. And a full team of mortgage experts. I'm not the only loan officer that works here. So we definitely have a team of people. Processing is done here, underwriting, closing. We could talk about differences between mortgage brokers and credit union loan officers all day long, but for the purpose of this presentation, we've got your back here at Texans. All right, so once you've gone through we've budgeted, we know what we can afford, we've done our research, we've made an offer on this home, we've talked to Texans, we're approved, we're ready to go, we went through all the processing, and now it's the best time, it's closing time. And I'm highlighting just a few things. There's a lot more that goes on to this, but the closing disclosure is issued to you at least 3 days prior to your closing date. That's when you should expect that. And it's super important that you sign that on time, and realizing that, as weird as it sounds, it may not always be the final number. When the lender is collecting all of your information, we're approving your loan, and then it goes to the closer, they start what's called the balancing act with the title company that you're closing at. And those are just finalizing figures. So you'll have to sign your closing disclosure, and then that should happen 3 days before closing. What to bring? You should always bring your driver's license, your homeowner's insurance policy. Hopefully we've collected that first. And then your funds for closing, whether you wire the money or a certified cashier's check. You're going to make that out to the title company. Texas is a title company state, so you will close your loan at the title company, but they will ask for these things from you. That's what you should expect. During closing, your title or escrow officer will review and have you sign your note and deed of trust. Super important. That's exactly what gets recorded. And you definitely want to focus on little things like the spelling of your name. Did we correct this, or did we record this correctly? And this is sort of your ownership document. This tells you you own the home. Mortgage related closing documents, that's also something you'll sign. There's a whole stack of them, and obviously your final closing disclosure. Just be ready to sign when you get to title. The escrow officer is also going to, they're very good at explaining every document that you sign. They'll go over the cost, your taxes, the prorations. There's a whole bunch of stuff that goes on there. But obviously the most important thing is getting those keys. That will happen once the lender has seen all of the documents and has funded your loan. So just some final tips and takeaways. I know I went really quickly through that. Now this is your home, so take care of it. Make it your own. It's upkeep and style. I know that you'll probably go to Home Depot or Lowe's. That'll be the first thing you do after closing. And, this is your home now. All that hard work, all that saving, and all that budgeting, is finally going to pay off. So make this your home. And now is a good idea where we can go and purchase things like furnitures and appliance, but you want to use those savings. The last thing you really want to do is run up there and start, getting into debt again. But we've budgeted for it, right? So you want to utilize your savings. There will be things that you end up having to buy for the house. Like I said, paint, or everything. A lawnmower, that's something I didn't think about when I bought my home, even as obvious as that sounds. You definitely want to utilize your savings as much as possible. The least fun part, I think, of of getting a new home is getting your address updated. Just remember, you're going to have to update it with everything: your driver's license, your employer, your health insurance, your subscription accounts, the doctor's office, all the creditors and financial institutions. You don't want mail going to your old house and they're expecting a response from you on something. So you'll just have to be mindful of that. You want to protect your house too. This is a very important place to be. You're going to spend a lot of your life in this place, so protect it. A Ring doorbell camera is those are great. Cameras in the property are very helpful. Getting those could have some homeowners insurance benefits to them as well. But you definitely want to keep a good sense of security wrapped around your home. And then finally, when is the first payment due? That is going to be the first of the month, but one full month after closing. That's confusing. But anyway, if you close, this example says that if you closed October 15th, your first mortgage payment wouldn't be due until that following month, which is December 1st. Okay. I appreciate that. Again, my name is Michael, and yeah, that's my contact information. I'm more than happy to answer any questions you have. And at this point, I will turn it back over to Josh.
Thank you, Michael. We appreciate your time and the knowledge today. We did leave a few minutes here in the presentation for any questions you may have for Michael or for myself. I am also a certified financial counselor here at Texans, so Michael and I do work together quite often. Couple of things that I wanted to highlight from Michael's presentation is, he talked a lot about credit. You do want to make sure that you're checking your credit report at least once a year, just making sure that everything is correct on there, from payment history to every loan and trade line on there, but also some things that people don't think about, such as the spelling of your name, the spelling of your address, your employer, because any incorrect information on there could have a impact on the report in a way that you do not want or realize. The other one was about, protecting your home. Michael talked about Ring doorbells and cameras and all of that. That is actually something that isn't talked about a lot that I've seen, but a lot of those times when you have those things, the extra cameras, the fire extinguishers, updated locks and things like that, you should be talking to your homeowner's insurance company, because they may offer you discounts for adding those additional layers of protection to your house. So those are a couple of things that I talked about in there, Michael's presentation, that I also wanted to comment on. Please keep in mind that I have never bought a house before, but I have helped my parents do so and helped them remodel. So I may not be a total expert, but that's why I have people like Michael and Paul on the call who have bought a home before. All right, so we do have some questions from the audience. Michael, the first question is, could you name some of the first-time home buyer programs you offer?
There are discounts with that. We can talk, if you want to address that to me after the call, I'm more than happy to walk through it with you. Every lender kind of has their own way of doing first-time home buyers. We do have a couple of very good products, and I'm more than happy to talk to that person about that after this call.
Yes. And by the way, for everyone on this call, whether you're a member or not a member yet, or thinking about becoming a member, there is no cost to meet with our mortgage loan officers or our bankers. You are welcome to come in. You can make an appointment to come in there, see them, but you're more than free to come ask us questions about your financial goals. The second question is asking, what is the best resource to check for the accuracy of a credit score?
Yeah, good question. I can't be held accountable for these, but the ones that I have seen that are pretty safe to use, I think, are I think Experian has one. I don't think that costs you any money. And then on the credit report itself, we actually give you a website to look at. Freecreditreport.com is one I've used before. You don't want to just really Google that, but you could call one of the credit bureaus, either TransUnion, Equifax, or Experian, and get their suggestion on what's the safest way to do that. That's where I would start.
And also keep in mind, your credit score is made up of all the information in your credit report. So I do like to remind listeners, make sure the information in the report is accurate, because that information determines what your score is going to be. You can also request a free copy of your credit report from each of the three bureaus, which are Experian, Equifax, and TransUnion. You can request one free one a year from each bureau. It is recommended that you don't do all at once. Space them out. That way, if anything's changing, you can catch it more quickly and get it updated faster than if you use them all in January and you have to wait till January again to get your next free copy. So I usually advise maybe doing the first one in January or February, the next one in June, July, and then your last one around November, December for each bureau. Question about how do you schedule an appointment? We do have links on our website. However, if you go to our website today, Wednesday, October 29th, you may encounter some issues. There is a global-wide Azure issue that's affecting multiple institutions right now. So if you can't get in today, please be patient and try again later today or tomorrow. We hope it'll be fixed soon. But yes, usually on our website, you can book an appointment. You can choose the location closest to you. And from the appointment, you can choose to meet either by phone or in person. Usually that's going to be for our branches only right now, but we do also have our contact center line that you can call in and they can assist you as well. Michael, this is a good one for you. Where can they see the current mortgage rate sheets from Texans?
You can't. You can't. It's not a static thing. It's measured on your credit history, the amount of down payment you're making. There's also a thing called debt to income, and that's exactly what that means. It's how much in debt that you owe, and that's divided by what your gross monthly income is. And it's up to the loan officer to sort of do that. But those are all components. It's not the rates are here today for everyone. Every person is totally different, even more so on the credit score. Like a perfect score is, anything over 720, 740, but it plateaus from there. So like 740, 760, 78, it really just depends. There's no good way to answer that. That's why we don't publish rates. Good question.
Same person asked another question. Some institutions may provide that information up front, but each lender is different and they have different programs that they may use. They may partner with other organizations to help out people that may not initially qualify for that. So again, it's just up to that institution. In credit unions, we typically won't see that. One, most people are not aware that credit unions offer mortgages. Many of us do. But again, as Michael alluded to, there's a number of factors and reasons why we don't, but also we in credit unions try to tailor the entire process to you. Again, buying a house is not like getting a car or credit card. There's a lot more information, a lot more time. There are some deadlines that have to be met. So we just prefer to tailor that one-on-one for our members here at Texans. This one question, Michael, comes from an individual, and it's actually 3 questions put together. So the first part is, on 2 years worth of a W-2, are they looking for the gross or net number more specifically?
So your income's always qualified off the gross income. The W-2 just supports your employment history. If you say you've worked at ABC company for 2 years and the W-2s don't really support that, then that's where the question would come in.
And the second part of that is, are fees the same no matter which title company you use?
No, they are not. Some of the title fees are the same because that's governed by like the state of Texas title insurance, but their escrow fee could be different. There's a lot of fees that the title company charges. Some will be static and the same no matter where you go, like the title policy, certain things that they do because those are governed, but there could be a small fee here and there that is different from one title company to the next. I don't see a lot of discrepancy on that. And where I think that person might be going is, if a loan officer ever tells you these are the fees that I'm responsible for and all these others are third-party fees, that's a true statement, because no matter what title company you choose, they're all going to be roughly the same, but not exact.
All right, and the third part of this question block is, what percentage of fees are associated at closing? For example, if I want a down payment of $25,000, what is the closer realistic amount that I will end up paying upon closing after fees?
That's hard. Yeah, that's going to just depend on how big of a house it is or how much you're borrowing. You know, if you say it's about 2%, that would probably be on the higher side of things on what your closing costs and fees would be. It certainly could be less than that. But again, that's all evaluated on the application. And that's why you'll get a loan estimate when you make application. Those loan estimates and even cost estimates are just there to present that information to you. But there's not really an exact formula behind that. But it's typically around, 1.5%, 2% on the high side after the down payment. Just as a general idea. Again, it really just depends on how the loan's structured. It also is going to depend on the negotiations. The seller, during the negotiation process on the particular home, maybe there's an opportunity for some of the closing costs to get paid for by the seller. So there's a lot of different variables when it comes to that. But as a general guideline, that's what you should probably expect.
This is actually a good question, Michael.
These are all good questions.
Yes. This one I've never heard before, but I guess because of recent events, it's actually more top of mind than usual. For a buyer over age 65 or older who qualify for property tax freezes, how is the tax calculated for the new home purchase?
You'll have to get a title company to help you with that. We're going to qualify you with no exemptions. So it's like the worst case possible scenario, just in case some of those exemptions don't get approved for whatever reason. But how to do that specifically, your title company can help you with that.
And that brings to mind, as a reminder, if you are buying a home, remember, it's going to depend on where you're buying as far as the state. Each state has their own local and state laws as pertaining to home buying. Also, it's a good reminder wherever you're buying your home, because you're going to be there for at least 5 to 15 years, right? Because you just bought the home. Most new homeowners, I find, are not paying attention to what's going on locally, like in their city or county around, like bond issues or stuff like that. And you may want to pay more attention because depending on the outcome of that issue could have an impact on um, taxes, including property taxes. So make sure you're also staying up to date on what's going on because it could have an impact on you. Whether that's a positive or negative impact, we don't know, but just be aware of that as well.
Right. And once you file for those exemptions, whether it's the over 65 or, the home ownership discount, that all happen. When I said qualify, we'll qualify you one way, but the payment that you get once the exemptions are approved will reflect that. So you definitely want to do that as soon as you close.
All right, Michael, next question is, for an owner-occupied multi-unit property, what would be the best loan option and what would determine that?
So on a duplex or a multi-unit, the mortgage product is still the same. There's no difference on what actual mortgage product that person would get. I would typically probably recommend, the normal down payment. Structurally, there's some things that we do differently on our side, but there's nothing different from a loan program perspective. That's another conversation we can have offline about, well, I want to rent out the other unit and how do I use that in my advantage of qualifying? Can't answer that today, but we can talk about that offline. But as far as like a loan program goes, there's nothing different about that.
And this is a good question. How long after the pre-qualification does the borrower have to find a house or buy a house?
Yeah, so the approval itself is good for 90 days. And it's reflected on your approval letter. That's just really when the credit report expires. So if you go over that time, we may ask you to reapply again. But typically it's 90 days. I say 60 because it will take 30 to close the loan. But if for whatever reason you run over that time limit, it's not the end of the world. We'll just engage with the loan officer. They'll have you reapply, and we'll get it off the ground again.
Next question is, do you offer HELOCs, home equity lines of credit, for home purchases?
We do offer home equity lines of credit. What that money is used for is kind of up to that person. We have a whole home equity team that can answer that more strategically and get you a good answer on that. We have like I said, a whole department that handles either home equity or home equity lines of credit. We do offer them, and like I said, the money could be used for whatever, but typically using that for a home purchase, that requires a different conversation.
And then you may have answered this already, Michael, but what is the current time at Texans for closing a loan?
30 days should be the expectation. We can do it quicker than that if there's a need to. Some of the sellers in this market that's what you should expect. Every situation's different, but our process shouldn't take longer than 30 days from start to finish. And again, we can go faster than that if we have to. It just really depends on the case itself, but that's about the average time.
And Michael, the next question is there a loan application fee? And I think what they're asking is, do they have to pay a fee to submit the loan application, or is there, and if they don't have to pay a fee to necessarily submit it, is there a fee on the back end for the application?
Heavens no. You can apply free of charge. There's an application fee at closing. That's part of our fees, but no, here you don't have to pay an application fee just to apply.
Sure. and I saw this question pop up before, but Michael, someone asked, what makes Texans a lender of choice for a mortgage? Like,
Well,
why would they choose us?
yeah, that's a great question. We're local. I personally, whenever I do business with anything, um, I guess I'm just a little old school in nature, but I kind of like to have a person on the phone or I'm sitting across the table from them. This, at least this is more of an opinion. When you're going to engage in the biggest thing you're ever going to buy, it's not something I feel like you can just get online and be done with it. I feel like there needs to be a person that not only has your best interest at heart, but is experienced. There's a lot of things that may present itself in the process. And if you're trying to chase someone through email all the time, that could be problematic. And I think Texans solves that by A, we're local, boots on the ground. B, I think credit unions give you a competitive advantage over some of the other traditional lenders out there. And our process is done here in house. Everything happens in Richardson at this building. You're not farmed out to a third party. Your loan's not getting transferred to a different state or a different department where you're just never going to hear from your loan officer again. We don't treat you like a number. You're treated just like a member. And so there's a warm sense of affection there. It's a human element. And that's the way I kind of like to do my business. So I think you'll find that experience with us is definitely something, we speak to.
And I'll add on to that. Doing this for a while, I've spoken with a lot of real estate agents over the years. I've even done some focus groups with some. Most real estate agents will tell you they love dealing with local lenders where the decisions are made in the market that their clients are buying or selling a home. Typically, they get faster answers. Any hiccups are handled a lot more quickly. The process seems to be a lot smoother. And it's like having someone in your court, having your back to help you make sure that this is the smoothest and easiest transition for you. Again, as Michael said earlier, this is probably going to be the biggest purchase you ever make in your lifetime. So you want to make sure that you are taken care of because this is a lot of money
Yeah.
being spent
Yeah.
and a very big commitment after everything is signed. And thank you for attending the comment, who is a real estate agent who can back up the claim that she is saying that as a local agent, they do love local lenders. So thank you for saying that.
Yeah. And one thing to reiterate there too on, having a person to really communicate all this to, you can jump online and if you got an automatic approval letter, it's only the information that you submitted is only as good as the information you typed on the screen. And so, that should be verified. There should be a human person at least reviewing. You make $100,000 a year, but really do you? Is it hourly? Did you miss some time, et cetera? There's a lot of things that you can't, the online application is not going to be able to tell you exactly the real truth of what it is you're looking at. So I think, going to a local lender, you get an advantage there.
All right, we do have a couple more questions that came in too. Someone is asking, can you comment on the difference in the pre-qualification and mortgage process for a new build?
Well, having it be a new build doesn't really change how you're qualified. It's the same steps. I think maybe where that person might be going is the property taxes. But we approve people on the realization that their property taxes are going to be not what they are when you bought the home, meaning like the subdivision's not grown itself yet. There's only a few houses. The taxes are very cheap. We don't approve people that way because it's not what's going to happen. But as far as it being a new construction and pre-qualifying, the prices or the process is still the same.
Another question, Michael, is after the pre-qualification, are there any additional hard credit pulls done before a closing?
No, only if it's warranted. I could see a lender saying, that's a good question, actually. We, if the credit score was one number and that number was still good enough to get the process started and to engage in getting a contract, but maybe that number is like right on the fringe of getting you a better interest rate. Some lenders will give you some suggestions on how to improve your score, and then another hard pull would be required because it's advantageous for you. I've done XYZ. My score should go from a 720 to a 780. And that's also going to give me a better interest rate, potentially better terms for the mortgage. So I could see a lender doing a hard pull in the middle of the process for that particular case. But no, the only thing the lender's going to do is a soft inquiry a few days before closing, just to make sure that you didn't, buy a new Mercedes before closing.
Yeah.
And I joke, but any kind of excessive credit pulls, I mean, any major purchases, that's why we tell you, you don't want to do any of that stuff. You just want to kind of hold on to everything until the lender's finished.
I agree, Michael. Best practice that I have told members who have come to me is make sure you have all your credit needs completed before you start the home buying process. So no new credit cards, no new vehicles, because once you start this process, anything you throw in there that's not planned or foreseen by your lending team could delay the process even further for you. So make sure you have those open conversations with your lending team just so they can guide you and give you the most accurate timeline they can.
Perfect.
Another question. I'll lump these two questions into one. What is an option period, and is there a cost with an option period?
Yeah, usually it's a couple $100, either 100 up to 250, and typically that's kind of not your escape out, but the option period is really the time to get your home inspected, so you can either renegotiate or look for a different property. But the option period it's usually $100, sometimes a little bit more, just kind of depends. It should never be higher than that.
Okay, another question came in. If you're getting a mortgage with a spouse, will they take the average of the combined credit scores?
Great question. And you'll have to just follow me through this. But when the lender is trying to determine what your qualifying score is, it's the middle score. You have three bureaus. You have TransUnion, you have Equifax, you have Experian. Each one has a different credit score number for you. There's a long little algorithm that each one of them use. We could spend a whole 30 minutes on that. But the middle number is the number that the lender uses to establish what your score is. So if one, let's say TransUnion has 780, and then Experian is 760, and then Equifax is 740, your score is 760. If you have a spouse, we're going to use the same thing, but we use the lowest middle score to determine the score for the entire loan. And so in that scenario, if person one is 760, but person two is a 680, then 680 would be the score for that particular situation.
And then Michael, we're at about 5 minutes left. I do have a quick question. Can you talk about if they're presented with options to buy down?
Probably to buy down the rate is what, yep, okay, that's certainly something you can do. That's every lender, when they're pricing the loan based on your situation, they're presented a list of rates, and each one will either cost something to get it or is usually there's some credit that's usually left over to help you with closing costs. But yes, if the opportunity does present itself, you can pay a little extra to buy down. You definitely want to make sure before you fall in love with that, just how much does it cost to get there and what's the difference in payment. And so, if it's $4,000 or $5,000 to save an eighth in interest rate, the difference in payment may be a while before you feel the benefit of that. And so you just want to make sure a good loan officer will tell you what that is. But yes, if that option presents itself, you most certainly can do it.
And then Michael, our last question for the day is going to be, does Texans offer a loan product if they are building a custom home using a builder?
Yes. So we have that's a construction product, and our affiliates can help us with that. So yes, that's not something we would do directly here at Texans, but we have ways to help you with that.
Awesome. All right. Well, that wraps up questions for today. If you guys think of any more for that you may have during this time or after this time, or you wake up tomorrow and you're like, you know what, I forgot to ask that question to Michael and Josh. Please feel free to contact us, visit a local branch. Michael's information is on the screen there, has been. And then I'll just share my screen so you guys can see my contact information as well. You can always reach out to our call center at the number on the screen there. Thank you all for attending this Text Talk. We appreciate your time today. Please make sure you follow us on our social media channels, Facebook, LinkedIn, Instagram, and TikTok for additional updates about credit union products, services, and programs, as well as when the next Text Talk will be. And we look forward to seeing you at the next one. Have a great day, everybody.